Are you ready to make some serious money with Ethereum? It's looking like it's gonna pump over the coming days and weeks. And we are gonna do a 5-day follow me series, with today being day number one. We're gonna go over the 4 secrets you must know to make money trading the markets. And we're gonna leverage Ethereum because it's just an ideal, optimal conditions. We don't know how it's gonna play out, but we're gonna do the technical analysis live. So if you're ready, let's dive straight into Ethereum. So we're going to break this down one by one. So the 4 secrets you must know to make money trading the markets. The first is identifying the trend. So what we're going to look at is the macro and the intermediate micro trend. So that's going to make more sense. So I'm going to dive into Ethereum now. Then we're going to do it one step at a time. So the trend. There's a great saying in trading, the trend is your friend, ride it until its end, until it reaches its bend. But we want a mechanical, objective way of identifying the trend. And I use something called an indicator called stochastics RSIs, these blue and the red lines. And basically the lows and the highs of the blue and the red lines, they tend to marry up nicely with the highs and the lows of the prices. So what we can see over here is this is a weekly chart. This is a weekly chart on the stochastics RSI, and the blue line has gone over the red. What that tells us is that the low, the recent low of Ethereum, is likely to hold for a number of weeks, if not months. And that gives us a good indication of the macro trend. And then the one on the right, this one over here, this is a daily chart. This is actually the more immediate trend. So we call that the intermediate. So when the two markets, the macro trend and the intermediate trend, are pointing in the right direction or the same direction, that massively increases the odds of it moving in that direction. So now we've got something called a double time frame momentum setup. Both macro, weekly, and daily are pointing up. So hopefully that makes sense. And we're going to go into this in a lot more detail as well. But it's mainly weekly pointing up, daily pointing up. That's one of my main criteria of even just considering a trade in the first place. 2 time frames pointing in the same direction. So we're going to cover all 4 secrets. But just so you know, I've actually got a masterclass that teaches this. It's the 4 secrets you must know to make money trading the markets. And again, we're going to use Ethereum. We're actually going to go over these on a real level in the detail. In the masterclass, I'll teach it on a high level, and this is really going to complement each other. You'll get access to my private Telegram group. This is where you get access to some of my advanced courses. I do live workshops on the weekend, which is today. Today's the weekend, so I'm doing a live workshop today. So it's an invite into that process. But the masterclass just teaches you on a very high level. So now let's just go into number 2. Right, we've got part number 2. My cat's playing with treats. She's trying to get her treats. If you could see what she's doing. I got a Bengal, I got 2 cats, and one of them has just got the packet of treats. She's, I think, oh God, she's gonna go for it. All right, if you could see what I could see, it will it's quite entertaining. All right, I'm gonna have to take a photo of this and add it to this video. It's quite funny. All right, pattern. So the second secret is pattern position. So markets are driven by psychology, fear and greed. And what you really want to know is the following. And I'm going to show you this with Ethereum. Markets tend to unfold into a 5-wave pattern, followed by a 3-wave pullback. And the reverse is true for a bear market and a bull market. So you can just flip it for the downside and the upside. And Ethereum is displaying this. And this is called the larger degree in terms of 5 waves up, 3 waves down. But then this part of the market, we call this a wave C. So it's an A, B, C. More often than not, it will break down to a 5-wave sequence in itself. And that's the smaller degree. Right? And you've got 2 degrees of wave counts indicating that we're at the end of a wave C. And that's what we're going to look at now with Ethereum. So let's just dive into this now. All right, so I'm going to go into a daily chart. So I'm going to just zoom into this chart. Let's just get the price data up. I'm just going to zoom out a little bit because it's really this part of the market since June 18th. This is the key information that we want to look at. So remember what we said, 5s and 3s. So do you see a 5 and 3? Well, you can see why I'm excited. Hopefully you can see why I'm excited about Ethereum, because it just looks like a very textbook style wave 1, wave 2, looks like a wave 3, a wave 4, and a wave 5. Doesn't get much cleaner than that, right? That's just textbook. Like, it's just almost perfect. And then we have also seen, we can just draw this, a nice wave A, B. And initially we thought this might be the C, but we had a bit of a correction and another move down, and it looks like a three-wave down to the downside. And this, you'll see this on macro degree trends and micro degree trends. What I mean by that, this is important. Just want to cover this with you. If I can go to a weekly chart, and I'm just gonna zoom out with Ethereum. So I want to show you something. Do you see a 5 and a 3 on a macro? This is like us really zooming out. The data is from 2017 to now. Do you see a 5-wave and a 3-wave correction? Well, check this out. 2017, big correction, wave 3, wave 4, wave 5. And then what's happened since November? Look at this. Looks like A, B, C, and this down here we're looking to hold. So this macro degree pattern is also representing itself in this part here that we just looked at, right? We see this 5-wave move up and 3-wave move down. And this is what I'm constantly going on about. It's my favorite setup. So we got a macro pattern because this normally means that we're going to see a new trend unfold more often than not. But also the immediate thing that we're going to focus on is this movement. That's potential. That's the potential that we're looking at. So that's the second secret, right? We're looking at 2 degrees of wave counts. Hopefully that makes sense to you there. So now let's just bring that back in. Just going to zoom back in because we want to really, really focus on this. We're going to go back to point number 3. So now we've got the pattern of the larger degree and the smaller degree. Now we're going to go to the third secret, and this is really going to add some massive odds in our favor if this lines up. It's Fibonacci price. There's really 3 types of Fibonacci ratios. The main thing is that wave 1s, wave 2s, they have a relationship to each other. Wave 1 to 3 have a relationship to wave 5. They have a relationship of buying and selling behavior. And if you know that relationship, you can measure it. So what we're going to do now is, is we've got this 5-wave move to the upside, 3-wave move to the downside. What we want to know is price tends to retrace to a certain degree. We're going to cover retracements. Wave B, this over here, has a relationship to this wave. That's an external retracement. And then extensions. This wave here and this wave here, they tend to have nice relationships to each other. And we're going to cover that in a bit of depth today. A bit of depth, just so you can see it live in action. Because we're going to do a 5-day follow me. This is day number 1 of the 5 days. So let's go back into our live chart. By the way, I covered this in the masterclass. It's free, but it just gives you access to my training, but the high level of what you really want to be looking for time and time again. And it's like magic. It's like magic that you'll see the market from a whole new standpoint, and you'll see things that other people just can't see, but you'll be 2 steps ahead as opposed to 2 steps behind. And if you like what you see, you can get my advanced courses. You can join my private Telegram. Again, we're doing live workshops every single weekend, which you'll get access to. So you can ask me your personal private questions with different tokens and everything else. So now we've done the pattern. I'm just going to do one more degree of count, right? Because we spoke about it. I'm just going to do it here. This looks like a wave 1, 2, 3, a potential 4, and a wave 5. Right, so this is the 2 degrees of wave counts we were talking about, right? Just so we're clear on the same page. I'm just going to change the color so it's just a bit clearer to see. We'll just change it to green, and we'll just change the wave count to a minor wave count. I'm just going to change this to blue, just so you know it's the same degree as the other one. I know I'm talking about a lot of detail here, but that's fine, right? So that's the pattern. So we got double time frame momentum, and we got pattern position. Now we're going to Fibonacci price. So Fibonacci price, when the price moves up, it will tend to retrace to a key ratio on the way down, right? And that's what we're going to do first. It's a retracement. So there's a tool here, literally just Fibonacci retracements. We're going to take the low to the high. And the 3 ratios we want to be aware of that are most common. Minimum 50%, that's what 0.5 stands for. 0.618, which is the Fibonacci ratio. And then 0.786 is the square root of this down here. So we can see we're in this range. Right, so that gives us a big clue. So when we're going back over here, that's the retracement. That's the first one. Then we're going to do something called an external retracement. I'm also just going to get rid of the first one because we've exceeded this one, so that's no longer relevant. So now we're going to look at something called an external retracement. And I know I'm doing this fast. It's why I've got the masterclass, because I cover it slower and in more layman's terms, so you can really take your time learning it. You can pause, you can rewind, you can take notes, and so on and so forth. So external retracements is we're going to look at the relationship between wave B and wave C. Right? There's a really strong relationship, really reliable, and it's called an external retracement. You do it the same way. You take this low to this high. But the key difference is the ratios. And the 2 ratios for external retracements is actually 1.618 and 1.272, right? And you can see it overlaps right into that range. So we've got this, it's really down here that we're really paying attention to. So we've got this cluster now. So that's the external retracement that we're referring to. Now, lastly, we're going to do the extension. Extensions can be really, really powerful because more often than not, this wave A and this wave C, they're almost identical more often than not. And so one of the key ratios is we measure wave A, we project it from wave B, and the ratio that we want is 100%. And that's represented by 1. And you can see right now, look at this. It's beautiful, right? Look at this. We can see this nice cluster down here, right? And then there's a weaker cluster up here that we've exceeded already. Right, so now we've got a nice confluence of events. We've got double time frame momentum, we've got pattern, and now we've got Fibonacci ratios, key ratio relationships that are showing us some very important information. By the way, at the end of today's video, we're going to drop down to an hourly time frame because we're going to do a 5-day follow me. We don't know, this is live, so we don't know how it's going to unfold. Our trade expectations over the coming weeks is going to be this. Is it going to unfold like that? Well, today we don't know, but we have to make the decision today so we can profit from it if it does. And then we're going to have proper risk management, trade management strategies in play so we can protect ourselves from the downside. So we've done, that's fine now. There is, I'm going to actually do one more thing actually. I won't show how much detail I was going to go into, but I'm going to do this. I cover this in a bit more depth in my courses in the masterclass. Is in the green. So if I just get rid of this blue line for a second, because this is going to set the foundation for the 5-day follow me on Ethereum. For the green lines, is more likely to be here. For the green lines, we have something called an end of wave 5, which is basically, you see where I've drawn this 5 over here. With Fibonacci ratios, not only do you have retracements for end of a correction, the most powerful one is the end of wave 5. And there's particular relationships that wave 1 and wave 5s have. I'm going to cover that in a bit of detail. We have wave 4s and wave 5 relationship, and a wave 1 to 3 and wave 5 relationship. Now, again, look, let's call a spade a spade. Everything is difficult before it's easy. So I know I'm covering a lot of detail, but I want to show you what you have access to, and you can see the markets from a new lens, which is why technicals tend to be incredibly powerful if you know these 4 things. So what we're going to do first is we're going to do an external retracement, the same way we did the external retracement before, but now for the wave 4. And it's the same ratios. So we're actually going to measure this low here to this high over here. And you can see those 2 new green lines appearing. And that really gives us powerful information that this is a really key area that we want to be aware of. Wave 1s and wave 5s tend to equal each other. So what I'm going to do here is I'm going to measure this move to the downside, project it from this move over here. You see this red line? Right, that also falls into this range. And then last but not least, we're going to do something called, this is quite advanced. I know it's quite advanced, so do excuse me if it's kind of going over your head a little bit. But the main thing is these relationships with the waves are reflective. And again, you can see that cluster. So this tells us this is a very significant zone of support. And we can see that it's reacted. I know it was linked with CPI, and CPI was this day as well on October 13th. But it tagged this price, it's reacted. And this potentially could be the low. Doesn't mean it's guaranteed to be the low, but we've got double time frame momentum. We've got pattern on 2 degrees of wave count. And we've got Fibonacci ratios, price ratios on 3 degrees. So this is pretty strong, looking pretty strong, right? So now let's just go back over here. So last but not least, the 4th secret is Fibonacci time. The way we did price ratios, we can do time ratios in almost the exact same way, but rather than doing it up and down, we're doing it sideways, right? We're going to measure the momentum cycles. And there's 2 main ones, retracements and alternate time projections, which are similar to extensions. So we're going to now go back in. By the way, I encourage you, I implore you to join my private community, take this masterclass. I got some serious stuff in here because I've been doing it for 15 years. And if you like it, if you like what we're seeing here, it will just take you to the next level. So last but not least, let's do the time ratio. So let's just pull these blue lines back up. And I'm just going to zoom back out just so we have it all in scope. And what we're going to do here is we're going to measure how long did it take for this wave to unfold, and in terms of time. And then we're going to project some ratios forward. And there's really 3 ratios. 2 are most common, and there's 1 extreme ratio if the other 2 get surpassed. So I'm just going to now take this low to this high in terms of time, and we see our 3 ratios. So when you see a correction and a high and the markets are pulling back, typically the minimum is 38.2% retracement. So we've surpassed that, which is good. Typical maximum, most common, is 62%, but we've also surpassed that. And then the maximum, more often than not, is the 100%. And we've also just gone beyond that. So we're at the extreme of time. That tells us that we're due a reversal. But what we can also do is, remember I told you wave A and wave C have a particular relationship to one another? We can also measure wave A, project it from the top of wave B. And there's 2 key ratios that we want to be aware of when we're doing the alternate time projection. It's the 100% and the 1.168. So what this does for us, I can actually get rid of these 2 because we surpassed these significantly already. What this does for us is it tells us that we are at the extreme of time. So we're due a reversal. So we should get some type of reaction. Now we have, excuse me, I've had this tickly cough for a couple of weeks now. It's not going away. Hopefully it'll go away by tomorrow for day number 2 of the Follow Me on Ethereum. So now we've got the 4 things, right? You see it? We got the trend in a mechanical objective way with stochastics RSI on 2 time frame pointing up. We got pattern. We covered that in detail, the psychology of pattern movements, Fibonacci price, and Fibonacci time. So what do we do with this? Like, how do we make money from this? Like, how do we trade this? That's what we can cover a bit of detail on next. So that's like the thumbs up. We got the thumbs up. So what we're going to do to finish up on this, and again, we're going to do a follow me on this analysis as the days go on, is I'm going to drop down to an hourly chart. So I got my hourly chart down here. I'm just going to bring the price data back up, and just give me 2 seconds. What I want to do is just get rid of these lines. I don't want them to show on the hourly chart. It's a great thing about TradingView. TradingView is the software that I use here, and you can decide where you want the lines to show and not show. So what we're doing is we're going into the last couple of days worth of data. So we were doing our analysis on the daily chart. You see these 2 bars over here? Well, in a day, you have 24 hours in a day. So where we see 2 bars over here, we're going to see 48 bars, right? 48 bars. So let's just drop back down to the hourly chart. And that's this part of the market right now. Yeah, so this is the last 2 days on an hourly chart. This move up and then move down. What do you notice? Do you notice anything? Do you notice any similarities to what we just did? Yeah, hopefully you're seeing what I'm seeing, which is on a micro degree time frame. It looks like a 1, 2, some type of explosive 3, 4, 5. So we can do the exact same analysis now for the daily chart. Sorry, the hourly chart. The first move down, it looks like we're getting some type of correction, and we should anticipate another move down. So I'm just going to do it at a lightning speed. But what we're going to do is, we're not going to do the momentum because we've got the daily momentum already. We can use the hourly momentum, but that's going to be more based on trade entry. What we're going to do is the retracement. So let's just do it quite fast. So we've got Fibonacci price. So this is when, once you learn this stuff, this is how fast you'll be able to do it. So I'm going to do it relatively fast. We got the Fibonacci price. We want the 3 ratios. We've got Fibonacci time. We're going to go to this low, to this high. The key ratios that we want, remember what I said, 38.2 to 62%. And then 100 as the extreme. So we're aware of that. If the market goes below this low, we can do further analysis. We can do extensions. We can do the external retracements. We can do the time external retracements or alternate time projections, etc., etc. So now what we have is what we're saying is we're anticipating that Ethereum, if, and the operative word is if, the price comes down to at least the 50% zone. So at some point from here, coming down, we want to look to potentially take a long trade, and get a really tight entry. I use a stop loss. That depends if you're just buying and holding the underlying asset, which is Ethereum, or if you're trading. It's slightly different because you're using a stop loss and get more leverage when you're trading. So we're going to look at this entry point, because what we're looking for, and let's just finish on this, is what is the outcome we're looking for, right? So let's just make an assumption right now. Let's just go, right, we are expecting some type of move to the downside, and let's just say the market does something like this. Let's just say it does a wave C like this, right? Let's just say it unfolds in a textbook like manner, and we're happy with it. We go, great, that's fine. How would we trade this? Well, we're going to look to go long, either on a swing high. And when I say swing high, it means this wave 4 high. Again, there's a lot of detail, I know, but I think it's going to be good for when we kind of look forward, and when we're following, 5 days, see if we get a good entry. I'll have my stop loss below a swing low. This is a very tight entry. If we manage to get something like this, this will be incredible. And then our risk is going to be this much. This is an incredibly tight entry. Right? But I'm just going to show you the trade potential. Now, we don't want to create too much hype with this, because, but this is where you can risk a little to make a lot. All right, so we're now going to just zoom right away out. I'm just going to close this down right away down like this. And we're really going to zoom out like this. And I anticipate Ethereum to, go towards the 3,000 mark, right? And the 3,000 mark is all the way up. Let me just make sure I'm grabbing the right bit. Let's call it 2,600, right? What is the ratio if we can get a really tight entry? But it's like an 88 times risk reward if we manage to ride a trend like that. Now, the downside of getting a really tight stop loss is you can get stopped out more frequently. The upside potential is much, much higher. So today was very, very detailed, I know. But do take the 4 secrets you must know to make money trading masterclass. It's going to just take you to the next level. And it will really complement the 5-day series that we're doing on the Follow Me on Ethereum. Because tomorrow we'll just see, did we get triggered? Did we get the swing high? Did it unfold as anticipated? And then we'll literally just follow it for 4 days, and you'll learn a lot of things. So if you like today's content, subscribe, hit the bell notification. Let me know what you think. God, I need to get rid of this tickly cough, right? I'm going to introduce my cat, by the way. I'm going to introduce you. Boy, this is the one that was going for the treats. This is Taurus. She's a bit of trouble. She's the trouble one. All right, let's finish on the quote of the day. We're going to go with chapter number 1 in my book. It's Michael Jordan, right? And the reason I chose this quote for today is we're looking to enter and go long on Ethereum, but there's no guarantees in this game. It's high probabilities. We've got double time frame momentum. We've got 2 degrees of pattern. We got multiple degrees of Fibonacci ratios on price and time. However, there's no guarantees. So we're going to have acceptable capital exposure, tight risk management, so we can really trade consistently. And this quote, I think is really relevant. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. That's Michael Jordan. And that's what we do when we come into trading. We have the setup, we take the shot. Does it go in? Does it hit the rim? We get a rebound, we take another shot. And once the setup's in play, our job is to trade that setup confidently in a fearless manner, but without being reckless. And what that really means is acceptable capital exposure. Normally there is 2% of the account size to find out if we're right. And if we're right, we ride that trend, because the trend is your friend. Ride it until its end, until it reaches its bend. And if we're wrong, we take a small loss, we break even, or we make a small profit. And that's just the name of the game. And we do that consistently. That's how we become the casino. Find the edge, trade the edge, and then make good money long term. All right, I'll see you tomorrow for day number 2 on Ethereum. Follow me. See you there.